Mortgage rates are down. Mortgage rates are at a 4-month low. They've gone down almost 0.25% in the last 2 weeks. What does this mean for the 2025 housing market? As a mortgage broker who's active, talking to clients every single day, talking to real estate agents every day in the midst of offers going out, conversations being had, I'm going to give you my take on what this is going to mean for the 2025 housing market. Rates definitely affect demand. They affect prices. They affect a whole bunch of stuff in the housing market. How they affect different portions of the housing market is going to differ. So I'm just going to give you a brief overview, talk about a few different markets that I've got intimate knowledge of because me and my team are doing hundreds and hundreds of deals every single year. So first and foremost, let's take a look at mortgage interest rates. People are always excited to look at mortgage interest rates. This is the last year. If you've followed me for any length of time, you know that me and other mortgage brokers, we refer to this Mortgage News Daily chart because it's a good national average for a conventional 30-year fixed, where many people are locking their rates that they get today. Over the last year, we've peaked. This was last April where it went above 7.5. We've gone all the way down last summer, end of summer, early September, got down here to 6.11%. And so it's interesting, spring and summer buying season last year because rates were coming down. They popped back up. But then as you can see, over the last couple of weeks from really February 12, we're up there at 7.13 to today, 6.8. That's a third of a percent. That's 33 basis points. Not 33 basis points in cost, 33 basis points in rate. Now, what I probably don't have to tell you is that the lower mortgage rates are, the more people qualify, the more demand that's in the market, and that has an upward pressure on home prices because when more people qualify, more people are interested in buying, it causes, more demand on the demand side. And with limited supply, which everybody kind of knows by now, we have limited supply. There's just not enough housing stock. That's apparent. It can have upward pressure on prices, but not everywhere. I want to show you another graph. I think this one is super interesting. And this is going to paint the picture I want to paint for you guys, which is not all housing markets behave similarly. While, these dynamics of lower rates and more demand and low supply, meaning we might get into the spring months and have, an $899 house listed that sells for $950 or $975. Yes, that's going to happen in some markets. But there are some markets that are seeing glut. Is glut the right word? Glut of inventory hitting the market. These are markets where, as a buyer, you have a lot of leverage. So this one's a little bit hard to see. I wonder if I could Control plus this bad boy and make it a little bit easier to read. This is Lance Lambert, Resi Club. Shout out to a great newsletter that Lance does. He talked about these 41 markets where January 2025 inventory compared to pre-pandemic January 2019 inventory is up substantially. Substantial. 70 friggin' percent, right? Punta Gorda, Florida, 70%, 69.8% increase in inventory. Now, for some people, what does that mean? Why should I care? When there's a 70% increase in inventory, I'll tell you exactly what it means. I think in Lance's words, he called these the softest housing markets. And when inventory is up and there's a lot of houses for sale, not enough buyers interested in buying them, that conceptually makes sense to you, right? Where, okay, I have my choice. It's listed at 300. I might be able to offer 280. I might be able to get a discount in price and have the seller pay the closing costs. Maybe even have the seller buy down my interest rate. That's what this means. The more inventory, the harder it is for a seller to sell, the longer it takes for a seller to sell, the more leverage you have as a buyer. So these markets, Punta Gorda, Florida, Killeen, Temple, Texas, Lakeland, Florida, Ocala, Florida, Colorado Springs, Colorado, Huntsville, Alabama, lots more Texas, a Washington, a Colorado, a Florida, an Arkansas, a Kentucky, a Louisiana. The one common thread here is a lot of these are Texas and a lot of them are Florida. A lot of the ones where we look at home price depreciation over the last, call it 6 months, 12 months, a lot of those markets are going to be Florida and Texas. They were red, scorching hot in 2021 and 22. And so it makes sense that these are the ones that are going to come back down to earth. When you see Punta Gorda, Florida, and you see like an 8% home price depreciation, what I don't think you should view that as a crash. I think you view that as a return to normalcy, a return to reality. In the run-up, you might have seen some of these places in Florida, due to migration, popularity, and all the factors, go up 50 or 60% in a 2 or 3 year period. That's not realistic. It's not sustainable. And so they're coming back to reality. So what I want to illustrate here is that these markets with humongous upticks in inventory are not going to see interest rates go down 0.5% and all of a sudden be hot competitive markets. They're just not hot competitive markets. But what we need to remember is when interest rates come down, it slides demand and competitiveness. So in a relatively competitive market, it becomes super competitive. In a not competitive at all, Punta Gorda, Florida market, it goes from your listings sit for 80 days and they sell at a 10% discount. Now they sit for 55 days and they sell for an 8% discount. That's what that means. It just slides that a little bit. So remember, as a buyer, as an investor, what you should think about when you think about mortgage interest rates. The longer you wait and the more people that join the party, the more competition you're going to have. Again, reiterating, zero competition in some of these markets to a little bit. In the markets that already have a little bit of competition, a little bit more. In the markets that are highly competitive, even more competitive. So I think my advice to people is, let's not wait for 5.99% when a lot of people are back in action. Move up buyers are back in action. First time home buyers are back in action. The quote or the thing that says for every 1% in interest rates, you unlock 5 million home buyers. I don't know how much stock you want to put in that, but there's some truth to that. Lower interest rates equates to more home buyers. So the way to thwart that is maybe enter the market, get a 30-year fixed rate conventional at 6.625, still have a little bit of the negotiating power to get yourself a good deal, maybe even have the seller contribute to closing costs or give you a discount in price, knowing that if and when rates get to 5.99%, it's going to be a lot more competitive. The seller concessions start to fall off the table. The discount in price starts to fall off the table. And I don't think we're in any position in most markets. In some of these Florida markets and some of these Texas markets, maybe we are. I don't think we're in any position where you're going to see any considerable discounts to home prices anytime soon, or for that matter, at any time. People that want home prices to be 20, 30, 40% cheaper, they've been holding their breath for a long time. Some places you can pin a tack to May of 22 and then see that you got a 10% discount from that point. I would argue that most places, if you got a 10% discount from the May 2022 mark, that's the best it's going to get. It's not going to get any better, especially if rates continue to trickle down like they have so far in 2025. So rates down 6.8% for conventional, average rate like I showed in that one. I'll pop it up here on the screen real quick just for people. This might continue to trickle down. If it does, it's going to draw more demand. It's going to have more active home buyers. Really, it's going to be healthy for the housing market in that we're going to see more activity. There's been some moments in time during the last few years in the housing market where everyone's frozen. 3.2% on their home they're in right now and an $1,800 mortgage payment. The move up isn't even in a question when we got 7.5% interest rates, but 6.5%, 6.25%, 5.99%. Now all of a sudden it starts to unlock. Okay, it's not that big of an upgrade. I can stomach my mortgage payment going up by $1,000, whatever the number is, because I need an extra 800 square feet. We're having kids number 3 and 4 with the twins that are on the way. We can't do it, right? Those are the conversations that I'm having. So hopefully this was helpful. Let me know if I can help in any way. GreatMortgageBroker.com. That's how you connect with me and my team. Just go fill out that form. We're in 48 states. So if you go to GreatMortgageBroker.com, you fill out the form. You're either going to be working with me or a colleague who I work closely with to, 1, get you pre-approved and get you ready to roll. 2, structure a mortgage that makes the most sense for you. As brokers, we've got access to all the best lenders in the country. GreatMortgageBroker.com. Hit us up. Talk to you soon. Bye-bye.